Traders use technical analysis tools to visually organize the raw data of a stock's movement over time so it's easier to interpret. Patterns, trends, and indicators, which we'll get to later in the course, all build on one foundational element, the chart. So that's exactly where we'll begin.
It can be difficult to spot patterns in dizzying lists of numbers, but when we plot those numbers on a chart, the picture suddenly becomes clearer. To get started, head over to Webroker, Research, Tools, then Charts, and type in the name or symbol of a stock. Along the horizontal line of a stock chart, called the x-axis, you'll find the numbers representing the time period of a stock's historical movement. You can adjust the settings of the x-axis in the top left-hand corner of the chart. Under time period and frequency, choose how far back into the stock's history you want to look and how frequently you want to plot your data, anywhere between once per minute and once per month. Along the vertical line of the stock chart, called the y-axis, you'll find the numbers representing the stock's price. To adjust the settings for the y-axis, go to Chart Controls, Chart Style, then scroll down to the bottom of the menu. You can set your chart style as linear, where the difference between each price point is the same, or logarithmic, where data points are plotted based on percentages. For example, the distance between $1 and $2 would be the same as the distance between $5 and $10. These settings can be applied to any chart style. Investors prefer different chart styles depending on their strategy and experience. You can choose the one that works best for you, again, under the Chart Style drop-down menu.
To help you decide, we'll give you a quick overview of 4 common chart styles and explain why one of them tends to be more commonly used. Without further ado, here's the scoop on line, mountain, OHLC, and candlestick charts.
The line chart connects the closing prices of a stock, the price the stock reached at the end of the trading period, whether that's a minute or a month. Some traders like line charts because they're simple. There's only one data point per day, the closing price, making the price action easy to read.
It's a great chart for beginners, especially if they haven't learned to use the more advanced styles yet. But the simplicity could also be a setback. Because there's only one data point, it's tougher for traders to identify buy and sell signals than with more detailed charts. You'll see why shortly.
The mountain chart is very similar to the line chart and has the same pros and cons. The only difference is the shaded area below the line, which makes the price action look like a mountain with peaks and dips. The OHLC chart brings us to more advanced territory. Unlike line and mountain charts, it gives us information about 4 data points instead of 1 for each day: the price of the stock's open, high, low, and close, which is how the chart got its name. The tips of the vertical line represent the high and low prices of the day. The horizontal tick on the left shows the price the stock opened at, and the horizontal tick on the right shows the price the stock closed at. Each one of these formations is called a bar. Since there are 4 data points in every bar, traders have more information to help them identify buy and sell signals.
However, some traders find bars confusing to read. For example, some beginners might forget whether the open price is on the left horizontal tick or on the right, which would make it tougher to tell if the stock price is moving up or down. To make this easier, OHLC charts are color-coded in Webroker.
When the closing price is lower than the previous closing price, meaning the stock price went down, the bar is red. And when the closing price is higher than the previous closing price, meaning the stock price went up, the bar is green.
That said, when it comes to trading, it's the candlestick chart that ultimately takes the cake.
Like bars in OHLC charts, individual candlesticks contain 4 data points representing the open, close, high, and low prices of the day. They're red when the closing price is lower than the previous candlestick's closing price, and green when the closing price is higher than the previous candlestick's closing price. But they provide even more insights as new elements are introduced, including the body and shadows, the vertical lines above and below the body.
Traders tend to find them easier to read. You'll see why shortly. Some traders may prefer less detailed charts depending on your strategy. However, we'll use candlestick charts as the basis for the rest of this course because of how widely they're used and the greater insights they provide. Try out the different styles for yourself in WebBroker and watch our video on the anatomy of a candlestick to learn more. For even more information, check out our upcoming webinars and live masterclasses on technical analysis, where our instructors are willing to take your questions.